Hi there traders, welcome to this week's Market Watch. I hope you're well. It's been a pretty active week across the markets, lots going on, so wanted to use this video to update on what's been happening, both on the positions we've already talked about, plus a couple of other positions that were also very nice setups indeed. So we can take away lots of learnings and take that forward and ideally continue the good run of form that we've had through January and keep that going all the way through to the end of the month and into February. So I want to kick off with the FTSE 100 trade because that now has concluded. So it's a brilliant way to start because we looked at this trade from the very beginning through the middle of December, where we got this beautiful setup all the way back here. We've already discussed this, we don't need to go through it again. We want to talk more about why did we manage it in the way we did. Now, for those of you who didn't see the blog, I did actually blog on Wednesday about trailing the stop on the FTSE position because it was looking incredibly weak, so we wanted to prevent any downside of giving away profits by just locking in a bit more profit by trailing the stop a little bit more aggressively. So let's go through that, and if you haven't seen the blog, just take some time to have a read of that. So we saw price surge up. It broke this short-term level of resistance and surged up into this resistance level, which was the top of the wedge pattern that we'd noticed a few weeks back, and we saw price bang its head into it and react quite sharply because we saw a couple of very significant high test bars, which are a sign that the market wants to push down. So when these banged their head into that resistance level and started to show severe weakness, that gave me a cause for concern. One other factor, which was also a major concern, was the stochastic divergence. Price had put in a new high, but the stochastic had actually put in a lower high. Very clear, very obvious. That is a sign that the market wants to reverse quite sharply. So all these factors coming together, the resistance, the high test bars, the stochastic divergence, all came together to give me a cause for concern that the market was going to reverse sharply. So what we decided to do was to move our stop on our position 2, because remember position 1 had already banked its profit. Position 2, the stop came all the way to 2%, and we locked it in there just in case the market did come back down. It did do that towards the latter part of the week quite aggressively, so that meant that the trade, or P2, concluded for 2% to add to the 1% that we'd made on P1. So all in all 3%. But it's really nice to look at this trade from the very beginning. We did notice that this resistance top of the wedge was going to be a roadblock, so we already knew at the point that we took the trade that was an area for concern should price get to it. As the market rallied up into that zone, it definitely gave us all the signs that the market was likely to reverse. So we're then constantly thinking about how do we preserve the profit that we've got on the table. And for me, I wanted to trail my stop rather than move it or manually come out of the trade. I wanted to put it in the form of a trail because the market could have carried on going up and I could have carried on taking a little bit more profit. It didn't, so we gave it back a little bit of profit, but not a massive amount. So really great learning on this trade from the very start all the way through to its conclusion and how we managed it all the way through that. So I hope you've taken lots of valuable learnings from this particular trade. Now, a few of you were asking me, could you have taken it short? Absolutely. Everything was there for a high probability short trade. There was resistance, there was price action, high test reversal bars, there was stochastic divergence, there was all those signs that suggested the market wanted to go down. So absolutely there was a trade on to go short, and this is the power of trading, how you can take positions long and you can also take them short. And this trade has already hit, for P1 it's 1% profit objective, and it's already run to almost 3% based on our risk of entry just underneath this reversal bar and stop loss just above the resistance level. So it's almost at 3%. To add to the 3% that we made on the way up, traders will always favor selling because markets fall much more aggressively when they're being sold off on fear than they do on when they're rising with greed. So a brilliant trade there that's really come from the middle of December all the way to the latter part of Jan and has now reversed off this top resistance level here in this wedge. Where's the profit objective? Well, here we have it. We have it down here. It's brilliant now that I have my roadmap planned out for me before I even take trades. Entry at resistance or entry at support, depending on the direction you're going in, and then target is essentially the opposite level. This market should really come down to this support level as a minimum, which should give a profit potential of almost 7-8%. So that added to the long position is absolutely fantastic. So hopefully you've got a lot of valuable learnings from this one particular trade and how you can utilize that across any market, because we're trading price action here. So price action is just trading human behavior. So long as a market is driven by human beings, you can apply these techniques across all markets, and that's what's wonderful again about the way we trade. So that's the FTSE 100. Let's have a look at the Euro GBP, because again I blogged about the Euro GBP on Wednesday. Just giving a little bit more information there. We were looking at potentially obtaining the 10% return. This was for the 4-hour chart, not the daily chart, but a potential 10% return, which is very unusual but still attainable. Let's just go and have a look at that Euro GBP trade and see what it's done. And I think I may have put a curse on it, because ever since I did that blog, the market has gone pretty strongly against us. However, my stop loss on P2 is at break even. Because remember, if we're trading off the daily chart, entry was underneath this big reversal bar. Not ideal, but still a good sign to get into the trade. Stop was above the resistance level, which meant our 1% target was down here. That was hit during last week. Absolutely fantastic. So another 1% to add to our profit. And we moved the stop to break even on our P2. However, it looks like the market could potentially come against us. Didn't quite make it down to this bottom support level, but nonetheless, it's still a wonderful trade. 1% is banked, and we're still in P2, but it's starting to give back a little bit of its profits. For those of you that took the trade on the 4-hour chart, you're obviously showing a much greater profit of probably 4 or 5%. With your stops at break even as well. So a wonderful, wonderful trade, again utilizing some very similar characteristics, price hitting its head against resistance and then trading it down to support. Now, had price come down to support, absolutely we'd have been looking for a potential buy opportunity down there. Not quite got there yet, but we'll wait and see on this particular trade. So again, utilizing the very powerful nature to get in, to manage it, and obviously to come out of the trade. So that's the Euro GBP trade. Kiwi dollar was a bit frustrating. Now, I want to show you a trade which hasn't gone so well, because we have been looking at a lot of trades, and January's been a great month. We've been looking at a lot of trades that have gone well. Let's have a look at a trade that didn't go so well. So we've looked at Kiwi quite a lot in regards to why we wanted to trade it. We entered the market way back at the end of November. That hit our 1%, but then stopped out our second P2. Now, I did look for another re-entry because we got this very key reversal bar on the 20th. So I entered just as the price broke slightly higher, expecting the market to rally and go higher. However, it triggered me in, and within a few days showed incredible weakness and stopped out both my P1 and my P2. So just wanted to go through a trade which didn't work out, because no trading strategy is going to be 100% effective, and mine certainly isn't. But I know that with the majority of my winning trades, they're very, very healthy in their returns. And it's very unusual for me to get hit on both positions. However, this is one of those occasions, but based on the other trades that I've taken, I'm comfortably in a nice profit for January. So it's frustrating, but essentially that's part of trading, and we have to learn to accept it and not let it affect our trades going forward. So sadly, that's the Kiwi. For me now, this really is just a mess. I can't see any further opportunities for me to trade here, so I'm leaving that be. Aussie dollar, that was very, very interesting, and I hope you guys were able to take advantage of this based on last week's video, where I expected price to retest this key support level here. As we saw, remember we took the Aussie trade long way back in December. We hit P1 target of 1%, but didn't quite hit P2, but we got our stop to break even, so we managed to squeeze a small 1% profit out there, and then the market broke this key support level. Now, we didn't want to get in as it rallied down. We wanted to wait for the retest. Again, I'm sure I mentioned this back on the video last week, where the price broke, we were waiting for a retest, and then we got this high test bar where we expected price to then have another surge down. So great opportunity to enter just on the low of this reversal bar here with a stop just above it, bearing in mind that the market has retested what was support now as resistance to force the price back down. It's already hit its P1 target, which banked another 1% here. Only small profits, but a couple of them, combine them together, that's 2%. That's really not a bad return for one currency pair. And it's broken, it's gone lower. Our stop on P2 is at break even, and we're just going to wait and see what happens on this, but hopefully we can start to trail this trade on P2 and squeeze a little bit more profit out of it. So that's the Aussie dollar. A couple of others that we didn't talk about but were very, very nice setups was one, the euro dollar was a fantastic setup this week. A lovely trend line was formed where price was respecting it very, very healthily. But the thing that caught my eye, the technical clue that caught my eye, was the stochastic divergence. Very, very obvious. Now, if we look at this price action, has a big move down, followed by a small move up, followed by a big move down, which creates a lower low. If we compare like for like, look at the difference there. Look at the divergence. That is screaming out at us that the market wants to reverse. And the fact that it's also bouncing off a trend line as support furthered our argument. Now, was there a price action reversal? Absolutely. There was a beautiful low test bar on the 20th, which then triggered on the 21st. So if we zoom into this area, we can see that powerful move where the market broke. It actually broke. I remember this. It broke on the 22nd because the 21st was actually an inside bar, which is again is a good sign. It's saying the market is holding price up, and then eventually on the 22nd it broke and took out our entry, which is just above the high of the bar, with a stop loss just underneath the low of this bar here on the 20th. The 22nd gave us a little bit of a fright because it didn't really do much and finished as a seller bar, a little bit of a scare, but then eventually broke out on the 23rd very aggressively, hitting our P1 target with our P2 stop at break even. So we can now leave that be and see what the market does to see if we need to trail or manage this accordingly. But another beautiful technical setup. Lovely clean price action, lovely clean stochastic divergence, and lovely clean price action reversals off a very obvious trendline support level. So fantastic learnings. If you didn't take it, absolutely fine. Take the technical lessons from this and utilize it going forward. And the other one was CAD Swiss. So let's have a quick look at CAD Swiss, because this was very technical, probably one of the strongest and longest trends that we've seen in the FX market. Just a phenomenal downtrend, and we'd seen that price had reacted to the 50 moving average and the trendline resistance just at the back end of December, rallied very nicely and came down to around about the middle of this channel. So when the price had a very weak phase 2 and then offered us this price action reversal, this high test bar on the 20th, the market then broke lower on the 21st, so a great opportunity to get a very efficient entry just underneath the low with a stop just above the high. What's also very nice about this is it's also former support becoming resistance. So support, resistance, bang. Phenomenal move down. Now, very nervous now because it's at the bottom of support, so it's potentially likely to rally. There's no divergence yet, so not really looking for an opportunity at this point, but it could have another leg down, give us the divergence we need, and then offer an opportunity to take this long. But in terms of a short trade here, beautiful. It's a bit like the Australian dollar where it broke support, retested, lovely high test bar, entry underneath, and off it rallies. Hits P1 1% target very quickly. P2 already has stop at break even, and we're around about 4% profit on this trade. So I'd be inclined to move my P2 stop to probably just underneath this support level here, just to lock in a little bit more profit. because the market has rallied and it's given me cause for concern. If the market gives me a key reversal bar, such as a low test, I will then probably trail my stop just above it to lock in the 3 or 4%, because we are getting to a zone where potentially it could rally back to the top of its channel. So another technically very sound opportunity. I hope you are spotting these. I hope you are taking advantage of them. If not, I hope you're able to use this information and these learnings going forward. And then finally, I want to finish with gold. Gold is another one, a bit like the FTSE, that we've watched from its before its very turning point. We actually preempted the move before it happened. Remember that video that we blogged about, the text blogs? We're looking at this beautiful ABCD pattern, where this leg from here to here was 180 points, and this leg from here to here was 180 points. So an almost perfect ABCD pattern, with the market bottoming out at a very significant support level. It also put in very nice stochastic divergence and then gave us that bullish reversal bar on the 31st of December. The market then rallied into the new year, triggering us into the trade. The market then hit this resistance level, but also hit our 1%, so enabled us to move our stop on P2 to break even, and also banked our 1% on P1. Now the market has closed above this resistance level, which enabled me, or gave me confidence, to stick with this position, and now the market has rallied strongly. It's not quite yet at P2 target, or profit 2, meaning 2%, so we've still got our stop at break even. But what I'm inclined to do is, now that we've formed this almost this mini support level just here, what I'm going to do now that it's broken higher is I'm going to move my stop from break even to just underneath this low area here to lock in a little bit more profit, because it's found support here. So it's a very technically sound area to put my stop. Not only is it below this mini support, it's also below resistance here, which, if this comes back, this resistance should provide support for the next surge higher. So it's a very nice opportunity for me to lock in another 1.5%. If it does get to 2%, then I'll be able to move my stop to the 1% level and lock in another 1% there. So really, really strong trade. Again, it's not one that we looked at in hindsight. We preempted this before it happened. You can go back through the blogs, you can look at these powerful stuff. All these technical elements that I'm teaching you are elements that will help you preempt turning points in the market. And as traders, we make money when we preempt a change in direction. We are speculators on direction. If we get that direction right and we get the most efficient of entries, we are highly probable of taking a nice return. And if you're able to take 1, 2, 3%, compare that to what else you'll get in the market. What will the bank offer you, etc. And you are absolutely flying. All in all, from the positions that we've looked at, we're roughly 6% in profit, with trades still open, and the likelihood of getting another couple of percent banked before the end of the month. So if you consider that as a monthly return, absolutely fantastic. So this is why I'm very, very passionate about teaching these clues, because they are very, very, very powerful, and they can be added to what you're already doing, or you can use them in their own entirety, whatever you feel is best. But hopefully they're becoming very, very useful and enabling you to see the markets very differently, and seeing that, obtaining that confidence that you need to take those trades. So that's really the summary of the market from last week. Plenty going on, plenty likely to continue going on over the next few weeks and months. So really, really do get stuck in. Always concern yourself with your risk management. Always preserve the downside and protect yourself at all times, and then let those brilliant trades generate your profits month in, month out. So have a great trading week ahead. Keep your eye on my blog, because I'm not going to update you for every single post, because that's going to irritate you. So just keep your eye on my blog daily, because I do add further elements to the blog that I won't be updating you on. So until I speak to you next, take care and happy trading.